Morning, everybody. All right, so market top or market viable pullback? We'll find out soon enough. It's based on the daily chart. It should be a viable pullback, but we'll see how far it gets from there. Give me 1 second. All right. Well, let's see where things are at. Getting a gap down. Where was it? What was the low? You can see my cursor there across all of the charts as to where prices are at. And so kind of what we call minor support. It's close, not quite there, but close to the top of that bar on the daily time frame. Oh, on a side note, you can, especially those on YouTube or social media, we'll put it out there. Trader McGraw, we're going to do the discussion about SPX credit spreads on Thursday at 12 o'clock, and we'll broadcast that from the green room. So make some side note. If you typically take lunch, maybe you want to be here for that time. Okay. All right. So this is part of the process I go through anyway to see what I think is acceptable and really a no-brainer for a credit spread on SPX. See where they're at on SPY, because I can't see that on SPX. Charts don't update. So seeing where they're at, seeing where support is. So prices are gapping down a decent amount. You see the high here, and they did clear this pivot on a closing basis on the weekly chart and got above there. So there's the positive, and we do have this bottoming process here. And there are other things going on that, question whether this pivot low here from December is going to hold or not. We don't know right now, but I'll explain. Right now, we got to see as things begin to pull back, based on the strength of this move. And it did get, I guess, a little semi-climactic, but it went straight up here. It's not really a climactic because this was a controlled uptrend here, consolidated at resistance and left pivots and consolidation points as references on the pullback. But this here went straight up. So now it's pulling back into this area here. And just based on historical patterns, the assumption is that somewhere in here, buyers should want to step up based on the strength of this move. One of the things I said last week, just based on as prices began to go up, and I think they were approaching this high here, and they were weak at some point. I don't remember which day it is, but the recordings are there. I said that these kind of moves typically do not just turn and collapse because they're strong. So buyers step up, and then it makes a retest pattern, or maybe it makes a higher high where the momentum slows. There was no slowing in momentum here. It actually picked up. So there was a nice momentum increase here, and then it was okay here. So how do we measure that? Where it stalls, and then you get a red bar. So, it picked up here. So buying pullback, see if it comes back up there again, and then momentum slows, and then we see at that time what type of larger correction there might be. Okay. So again, prices are down here. You can see the cursor kind of on this minor support, that high there. And you've got this cluster of open and closes right there, which is this little consolidation. I like to look at the futures, see where they're at. You can see the pullback there, really not really a big deal based on this trend, daily time frame. Futures are stalling, little peekaboo above the high. They couldn't close above it. And now we'll see this week whether it's an inside bar or a big, nasty, ugly red bar. How deep can it get into that prior bar? What do you want to say? I have 40, 45. There's not enough on the upside. I totally agree. That was my conclusion. Right. So with SPX, is that the second leg up is bigger than the first. It cannot collapse like that. I think I understand what you're saying and would agree. So what I was saying is I hear whatever this pulls back, the first move, you can call it leg, is the power move, right? That ignites things theoretically, right? And then we just had this kind of nasty bar and it recovered from that. So it was kind of wild as far as thinking, buy here and hold on through this. You got to have, I don't know about, a strong stomach, but I don't know how many of us could say, hey, let's buy here and give back all the profits. And then if you sell it up here at resistance, to get back in after a vertical drop, it's easier said than done. But this was the pattern right there, the continuation pattern. To buy this, I couldn't do it anyway. So what I was saying here, explaining there, is that this pullback, maybe it gets back up, makes a double top or a higher high, and then we see if it fails. And so why would I think that? Because of the internals. Sentiment is up here at an extreme, and it could get more extreme if that rises on a pullback. Breadth has been deteriorating. So the internals are aligned with, the internals give me that bias plus the trend and, looking to the left. But hey, if it could get up, I don't know if it can, but, that's yet to be seen. Like, can it get back up higher to that pivot? And so we're dealing with now, but I know that pivot is up there, and I don't know if that's possible right now. Right now, we're looking at a little corrective pullback that's happening. Okay, so what else besides this suggests some bearish price action to come? I'll take a look at other markets, but I'm just going to flip to this page here because it's just faster. And so we got those internals, which I showed you. We've got the interest rates. We've been talking about this for a while, this support level, and to see if this holds. And last week it blipped under it and flipped right back up again. And now it's above that. As we know, as the markets were going down, this was going up, and that was been the inverse relationship last year, as well as the dollar at that time, was going up. You can see the cursor. So the dollar going up, interest rates going up, that was bearish for the markets. And last week, we talked about this potentially being a breakdown failure, and that happened. And it happened in a pretty abrupt way where it broke under that support and it's right back up above the high. So that's bearish for the markets based on last year's relationship. This is bearish for the market. This is bearish for the market. And now we got the volatility index all the way down to where the correction started in 2022. So lots of bearish stuff going on short term. We're going to see how nasty it gets or the lack thereof. And Friday's down move was confirmed by the very negative AD information, right? That number coming all the way down here. So there was power behind that move. It's kind of a crazy price action, and that buyers stepped up on the gap down without going down. Remember, we talked about prices potentially coming down to some support level pre-market and a buy setting up. And then it just blasted through there like the gap never happened. The enthusiasm to buy was a little crazy. And then this head and shoulders pattern developed, which I pointed out at the time when it happened. That topping tail was like, here we go. It's going to go down. And I said, I don't think it'll go to the low of the day. And it did. So pretty crazy kind of price action for sure. Normal. There's normal and there's abnormal. All right. So SPX. So I got this line here. One of my other charts I look at is like, what is the average true range over the last few days? And that's expanded from what it was. Prior to that move up, it was about 50 points. And now, it's expanded to about 80 points. Now, of course, that changes day to day, but with SPX, you want to be on the other side of what's happening right now. So Jake's telling me 40.50. If it bounces up, 40.50 is okay, but there was enough premium when last I looked at 40. It is enough. I mean, 40.45, which is where this line is. It's down here near this pivot. That's 90 points. It's on 90 points. Andres asked me, will it be recorded for those? It's going to be, it'll be recorded. Yeah, it's going to be right on YouTube. So you can log into YouTube. If you're on Facebook, if you're on Twitter, we'll stream it to all of them. But if you can get into YouTube, it'll be there. Yeah, it's away from a round number. It's beyond the average range right now. So it's got a pivot down here. It's, we don't want it to go down here, of course, but just looking at what I mentioned, we're always looking for what should be a no-brainer. It ain't going there today. So barring some crazy news, we don't know any, that's going to happen. So what I said suggests that this is going to be safe. And if it drops a little bit at the open, maybe get a, 440 with the same juice near the pivot. CCS, climactic. What is CCS? I probably should know, but I'll type call credit spread. The call side? No, I don't see the call side today. So it's here. And last I looked, even to go to 41.70, which isn't really enough to consider it. And it's I don't know. And this one for me is the no-brainer, and this is at a bullish trend. They could just surprise the hell out of you, So all right, let's just continue here. I take too long. Positive transports broke out. They look amazing. Just that doesn't mean they're not going to correct here, but just this pattern and this wide range bar on the weekly just leans more toward, the bullish continuation after some correction. So we'll see how that unfolds. And the doubt is, how high will interest rates and the dollar go? And we've also got oil, which has dropped down here to support. It's beginning to stabilize. And so if this begins to lift and the dollar lifts and, the 10-year lifts, they're going to be talking more about inflation. And then, the whole talk about the Fed is done or near done, maybe that brings doubts into the market and some extra selling picks up. So we got to look at, different scenarios, different possibilities, and then see what actually happens. Gold is up a little bit, but, we talked about this was going to get shellacked if the dollar did make that turnaround. And lo and behold, there it is. There's the inverse relationship. Silver got whacked. There's the dollar. For the longest time, we're talking about this basing action at this major support. I mentioned, could this be a breakdown failure? And there you have it. And so it's up a little bit more, and it's coming into that resistance. So it's not like, it's unlikely it's just going to blast higher, but let's just look, we look to the left, and we say that every day. And, if you're new to Master Trader, if you've been here, with us, listening to what's happening for a month, and you're saying, these guys just keep saying, look to the left, there must be something to it. And I'm like, yeah, McGraw, McFly, there's a lot to it. So it's basic, it's simple, and it's powerful. And it doesn't happen every time. You see here, I got an email from a subscriber that said, hey, Greg, what about that major support? It didn't hold. I say, well, there's no guarantee that it's going to hold, but you can see it tried to hold. It just never traded above a prior bar's high. But the attempt, the demand was there. Doesn't guarantee it's going to work, but, this being down as much as it was, it just made sense. that it should. Right? NQs, a little extended, as we all know. Meta, Facebook, that ridiculous gap up last week, an exhaustion gap that drove many ETFs that it's in up. S&Ps we looked at resistance there, and the Russell, another very positive event. And if you remember, a year ago, and even a little more than that, the majority of the time, the transports and the Russell lagged. They were always playing catch up. And now they're leading. So there's definitely been a change in the markets, and a positive one. And as much as things are up from the October low, this has been a wild price action. And you can see this is nothing more than a bottoming pattern that is now at the top of the trading range. And we're at a point to see, is this a bear market rally, or is the start of a bull market? And I think we're going to get enough information to figure that out in the next month or so. All right, that's about it. What we're looking about for today. So it's yours, Dan.
Good morning. So, yeah, our market internals sure gave us the heads up. Last week, I kept saying we'll trade bullish patterns, but with an eye on the exit door, and that's what happened on Friday. For those of you who, if any of you shorted this Deutsche Bank with me on Friday, I covered it pre-market right here at spot 18. We have very light inventory for the reasons of the markets. I looked a lot at, gold got whacked on Thursday and Friday. I couldn't find any call credit spreads with any juice over the weekend, but I wish we were a little more bearish on that sector on Friday. We only have 2 open trades in the weekly options. AMC here, we did a way out of the money put spread under last week's low. And BBBY, the $2 puts. Now we're playing with fire a little bit on this one because, some people think they could file Chapter 11, which is obviously going to hurt the equity. But they defaulted on their loan last week and the stock rallied. So as chart readers in something acting bullish on bearish news, we trade the chart and just assume the risk. I don't know, Robert, if you're saying why did it rally? Well, I know. So from a fundamental standpoint, the only thing that makes sense is when you look under the hood, it was a positive versus what was priced in already. But maybe the default is giving them more leverage and going to renegotiate it on better terms, So that's how you have to approach it from a fundamental, and that all market participants are figuring out what the thing's worth based on that news. All right, Tyson here, we did a condor into earnings. We did an out of the money 67.5 call spread, and we did the $60 put spread. So it's a big gap against us, no doubt. But we sold it for $1.25. I still think we're going to have an open profit at the open. So did I post it in here? So for, just general rule, 30-minute high-low for starters. And if we have a nice open profit, then obviously move it to break even. Let me check some of these other gappers here, not gappers, but earnings trades. I have them right here. No, Pfizer isn't earnings. Oh, it's up here. Pfizer's on my long list, just from a climactic and bullish turn. That's what we call it. It's a 4-bar turn on major support. And it also got a favorable Barron's article, so that's good to go over Thursday, Friday high. IDXX. I see a couple prints up here at 515, but it's not liquid. We'll come back. CMI, this looks fantastic. I got Tyson in my other computer, so I'm going to get rid of this. CMI had earnings. It's a closing breakout from a trading range, so that is a definite put spread idea. I'll look at it. You know, you got to let them trade for 5 minutes, just to get, you know, let everything settle down and the spreads tighten up a little bit. Oscar November, bearish gap down here. It's extended far from the 20, call spread idea. L Lima gapping up. Trades very, very sloppy. Look at these bars. That's a hard pattern to trade. So I'm just gonna, I don't have any interest in you. I'm CNA gapping up to 43. Gapping right to the middle of the range. No interest. NVIX, I don't see any prints, but I'm going to set an alarm at 112. If it gets up to 112, then 5-minute high. That's a put spread idea on earnings. You got a big old price void. We'd sell the 105 puts if there's any juice down there. AMG, don't see any gaps, but bullish all time frames. TKR. See, when you get Climos into earnings, even if it gaps against me on earnings, I just have a total bearish bias to fade. So now this one's gapping about right here. So that's a bear island reversal. That's a call spread idea. ENR gapping down, call spread idea. This gapping up, I don't like the way it trades. Look at all these overlapping bars again. I just have zero interest in that. Site, I can't see where it's gapping, but this is another one. I would have been all over credit spread. I'm going to set an alarm at 158, just under that 15-minute pivot. These are all just my watch list items here. IRTC, there was a lot of nice 1, 2, 3s that we found on Friday when we were scanning. Look at TNet. And these should be, even with the market coming in, these will not trigger unless they're genuinely strong. Look at Jack, looks great. There's another restaurant, looks great. OMI looks fantastic. Ideally, as the market comes in, these will just give us another bullish inside bar or two. And then when the market, we switch to a short-term bullish bias, then these will be even more compelling as longs. Rosas asking about CNHI shorts. CNHI. Not bad. It is a 1, 2, 3, but I can tell by how big this bar is that it has a big void. I would say on a bounce, yes, maybe on this 15-minute chart. See if you can get a sell set up here around the $16 level. And then I don't think it should get over this 16.20. I don't, and for day trading, of course, swing trading, you gotta get a bigger stop. Spot. We don't, just as a Irfan, just there's certain rules that you just have that you rarely want to violate. And so one is, unless we have a beautiful continuation pattern, don't buy far from the 20. So this thing's run from $80 to 125. It's vertical. The market internals are bearish. It is relative strength gapping up, but you just got to ask, what time frame are you trading, and go through your trading checklist, which is a summary of your trading plan. And if it meets your trading plan, then fine. And you might say, well, yeah, it's a 15-minute buy setup using pre-market data. I'm going to buy a 15-minute high. I'm stop days low, and I'll say that's fine. That's fine. Let's come back and take a look at it again at 9:45. But there's a lot of air under there, so that's the big problem. Here, another 1, 2, 3, IAS. Beautiful Massachusetts here. Beautiful bottoming pattern, closing breakout, big old void. That looks great. I'm going to put that in a window. My other computer, I obviously have an alarm already, but put them in a thumbnail and possibly get an early entry. Now here's a 1, 2, 3 I like. It's an igniting closing breakdown, and notice how it's gapping just under this 15-minute consolidation. So I'm going to put that in a window. BABA, by the way, was an idea to buy puts, and it's gapping down to it. I actually have a couple. So BABA, it's down too far for me to enter here. Leicester, what did I say? Leicester, I think is a put spread idea. Looks great. Oh, no, I do not have. Okay, I do not have an official trade on Leicester. I just had an alarm. I had an alarm at 183 that went off. It's a transport. It's technically not a 1, 2, 3 just because of that big tail. But I still think, since you got the gap negated, I think it's bullish, like a 1, 2, 3. Let's see where we're at on Tyson. We're at 68 cents. Okay, so we're almost at 50.65. I have a lot of contracts on this one, so I'm gonna just do some price discovery here.